Tesla, Nvidia, Apple, Microsoft, XRP, Bitcoin. Cue that wind effect. I told him. Now listen, y'all bring it in, fam. Listen, obviously we have stuff to go over our AMC. Some interesting facts. I believe our spring is loading. Obviously, we talked over previously about the fact that we're clearly being suppressed, but we got some more numbers to correlate as well as some more information as well, guys. Lou versus Wall Street connected dots, but I had already made the play anyways with Muln, where I went in with 500. After I got the dividend, I sold out because I was already in the perplex of saying, wait a minute, why does this say 000 up here? Why is this dividend? There's no price or anything with it. I sold immediately. I still kept the dividend, which is how I should have played AMC and 8, but of course we didn't know that it was going to be this debaucherousness. But Mullen has been aped, as Lou vs. Wall Street said, and that's, the most classic way that you can name it. But this is also a testament to everybody that's a yes voter, right? Where it's like, you see what reverse splits do, but you're going to be the imbecile to think that, oh yeah, let's do a reverse split. And of course, I know it's because there's elitists and there's following of YouTubers, there's new traits, candidates that are just leading people down a dark abyss. But guys, let's double tap in, guys. Nvidia is blown up out the smithers. As I keep saying, the greatest generation of wealth transfer is happening now. There's a bunch of fear in the market. Don't play yourself out your boat. Don't play yourself out your boat. Tesla, Nvidia, XRP, Microsoft. Soon enough, when retail gets levied, Amazon. Let's say Bitcoin, Ethereum, XRP. Guys, you know the time AI is taking over. The tech, these high pricing power companies, Apple, where you know people are going to be buying phones and they're going to make Elon Musk, in which we should be trusting. Don't miss out on these cheap stocks, because you could have bought Nvidia at 300 in the last video. Now it's near 400. I told y'all that volatility is in the market now, even on big names. That's billions of dollars that just appeared. It's not just meme stocks now that can melt up like that. This is the entire market, which we could correlate last time we're watching it. This market can be the other day when all the stocks were all running on the same ebb and flow. I said, oh, wait a minute. They've bound all this together. There is no such thing as a specific sector of stock now. There is no such thing as these are meme stocks. These are all of these can move with massive volatility and massive volume. But let's tap in it so we can get down to our keynotes with our AMC. Got some interesting stuff we can talk about. Let's get it.
Came into 2023 with a cautious field, but last month
Clark
actually called for a short-term rally. And even though we had some rough sledding for up until then, it was pretty good. But he says the rough sledding is going to come back in the second half of the year. Joining me now, Centauri Fund founder and portfolio manager Dan Niles. And Dan, you got the call right, but you actually say this is actually more than you were even expecting, right?
Oh yeah, this rally definitely went up higher than I ever imagined it would. But, we've seen this before, Charles. Obviously, multiples expand. And I think a lot of this has to just do with money supply. The Fed expanded their balance sheet by
NASDAQ holding that market up
after you had that failure of Silicon Valley Bank. And that happened in, a period of 3
Nvidia hits
weeks.
all-time high.
And
AI
we
chip
saw that during the global
demand.
pandemic, right? The market, the S&P was up 16% when we had a global pandemic. And that's because the Fed shoved in a ton of money into the market. And then obviously in 2022, we saw the hangover effect from that.
Mm-hmm.
And so for us, you talked about earlier in an earlier segment about Germany being in a technical recession. You're having Dollar Tree cut numbers today. You had Target, Walmart, Home Depot, Lowe's,
Retail
all
getting
talk about
smoked.
how the consumer was retrenching. And so, yes, it's easy to get excited.
Guys, this is stuff easy to see, but don't let this confuse you. Tech sector and the retail sector are two different sectors. Tech has already been levied. They got smoked. They already got hit. All the other ones are lagging behind. They have not felt that. Where you've been seeing all these retail stores cutting employees, that's because they know what's coming, right? But they haven't felt that yet. So like him correlating those together, that's still not, in my personal opinion, a good argument for why you shouldn't be picking up and scooping these techs. Tesla, when it was at 120, was a steal. You're not going to tell me stock that runs up on a regular basis in a 2-year span to 1,000 or 1,500 at 160 or 120 or 150 that has prompt additives coming, the cheapest vehicle coming. There's vast amount. I mean, Tesla's only utilized maybe 1 or 2% of the automotive market right now. I mean, there's so much growth to be done. These are what you call hodl. These are stocks to hold down on.
About Nvidia today, which I know we'll get to. But the bigger picture is not every company is as well positioned as Nvidia is.
Yeah, no, we talk about that almost every day on the show, right? How for the most part, 10 stocks have carried the entire market. But the interesting thing is we've seen 10 or 12 stocks carrying the entire market for years, right? We've seen multiple expansion go on and go on and go on. So in a situation like that, do you ride the wave while it's occurring? Because you already made the move. You knew there was going to be a short-term bounce. Or do you start to get repositioned because of your second half thesis?
Well, I'll tell you, the first thing we did this morning was we sold our Amazon, and we tweeted about the fact that we had bought it after they reported results, and the stock went down about 4% that day because of optimism on the retail business. But you know,
I mean,
when you
how do you have optimism on retail when inflation's rising? The amount that they're raising wages as far as paying people is up under. They're paying people an increase on average of 4%. Inflation is 5%. Optimism on what? I mean, this is just the goofiness that I don't even believe they ever probably even picked up the stock, but they're shooting this off the media.
Looked at everything
this
this
is
morning,
common
tech
sense.
in general was up. And
as long as you don't want to go to that grocery store right now, then you probably shouldn't be picking up retail.
We haven't talked about Snowflake, but one of the themes we've been talking about now since late last year is the fact that as companies lay off people, especially in the tech sector,
boom, boom, boom. Come on now.
They're looking to save money, and Snowflake talked about that on their call.
And they consider Amazon a tech company.
You know, things were going great right up until Easter, and then after Easter, which was April 9th, business started to fall off, and then that's continued in May. And if you look at Amazon, they saw a similar pattern in that their revenue growth in Amazon Web Services was 20% in the fourth quarter. That slowed to 16% in the March quarter. And in the month of April, that went to 11. And that, when they said that on the call, the stock went from being up 10% in the aftermarket, this is Amazon, to, you know, closing the next day down 4%, even though their retail business did great. And so I think, you know, and now we're actually short Amazon. To put it out there.
Right.
And that's balanced against our Meta long, where we still think they're going to benefit from a lot of the.
And Amazon, I'm about to open up a short position on you too, because I'm about sick and tired of these late deliveries.
AI.
That's why I canceled my Amazon Prime.
Advantages that they're getting from Advantage Plus, which uses AI to place ads. So this is a very complicated market, and just saying, oh, Nvidia is great, so everything is going to go up. You're going to have a lot of problems because there's going to be more snowflakes out there that you're going to have to deal with as well, because that money that you're spending, and even Nvidia talked about it, on AI is coming out of somebody else's
This is
budget.
the same people shooting that FUD off. You could have bought it at 300.
I got a minute to go, so I want to kind of focus on this second half. You're looking for a recession, but also no rate cuts. If there are clear-cut signs of recession, won't the Fed do something about that, or will they wait?
Well, the thing we haven't talked about is inflation. And so you talked about earlier about PCI and PCE and other measures that have come out. The easy way to think about it is this. The U.S. is a services-led economy. And what's the biggest driver of that? It's wages. Well, you have 50% more job openings than people unemployed. So that's going to keep wages, in my opinion, above 3%. And that's going to keep core inflation at 3% or higher. The Fed's target is 2%. So you can, and we've seen this in the 1980s.
Why do they leave information out? Yeah, there are job openings, but what job openings are they? You know what I'm saying? Yes, these restaurants down there that are trying to pay $8 an hour that nobody's going home. That's like, hey, listen, I'm sorry. Y'all paid us stimmy. They don't want to go back and bust tail for $8 an hour when that's not going to cover the cost of what it costs. That's not a good thing. those job openings, because those jobs aren't paying the wage that's needed to survive.
Go into a
It's not because it's
recession
an excess.
and the Fed isn't cutting because they're still having to deal with inflation. And this is left over from too much easy money several years ago. And you could argue since the global financial crisis that now we're going to have to pay that bill. There is no free lunch, as they say.
Yeah, I believe
and
that
so
part.
unfortunately now we're going to have to pay for 13 years of free lunches.
Yeah, well, let's just hope the hangover isn't as long as the free lunch. Dan, I love the way you walk the way you walk us through all of it. It makes a lot of sense, and we appreciate it. Thank you so much.
Hey, yeah, we appreciate that. Now listen, pulling in, guys, I got some information where I just want to bring some correlations in, guys. I personally believe that we got a spring loading just because of the blatant manipulation that's going on. We've already discussed this over the last couple of videos that we're just stuck in a barcoding pattern. But I have a little bit further because, like I said, I like to over here. We're not just gonna say things. I like to point things out to where it makes sense, because I know there's a lot of YouTubers where I had to come up and make my own because I got tired of sitting up here. You know, people will act like they're reporting on what's going on, but they're not saying anything. They're not really showing you anything. It's like it's not something that makes sense. But now, double tapping in, guys. All this right here, fully naked short selling. We've been barcoding. We all noticed the same thing we've been going off of. But what that led me to question was this: why is it such an open door of just short selling right now at this time, right? It led me to ask that question. I want to say, what allows or not allows, what would make hedge funds come out and start blasting the AMC stock at this point? Of course, that's $6, which I say is the max pain level, but it's so blatant, it's like they can't stop doing it, which makes me come in. I say, okay, why is it that they can't stop doing it? Well, we came in with some hypothesis. One, I already know there's not that much buying that's going on. Two, I came in with another correlation. One, obviously, it's a chat GPT. What a great thing, you know, obviously a great thing to use, obviously, is making us money. If you have been taking advice and going and picking up those stocks, obviously your portfolio is greener. Like I said, you need to separate your swing trades from your long-term holders, right? But now let's double tap it in. I looked up, what does it mean for a stock's utilization to be at 100%, which is what AMC stock utilization is every single day. When referring to stock utilization, the utilization rate of 100% means that all available stock or inventory is currently utilized or used. In other words, there is no surplus or excess stock remaining. Every unit of stock is actively being used or sold. A utilization rate of 100% indicates an efficient and optimal management of inventory. It suggests that the company is effectively utilizing its available resources and minimizing any waste of overstocking. However, it is important to note that maintaining a utilization rate of 100% can be challenging and may not always be sustainable in practice. Variations in demand, production issues, and unforeseen circumstances can impact stock levels and lead to fluctuation utilization rate. Now, notice that we don't fluctuate the utilization rate. And it brought me in and I said, well, wait a minute. How can a stock stay at 100% all the time? Let's pull in. I'm walking y'all down the plank with me right quick. Obviously, we ain't going to jump off. We're just going to look over the edge of it. Now, look. Short interest has magically dropped down 5%. Days of cover yesterday was at 1102-ish. Now it's at 890. Off exchange volume is 66%. And I started to note a correlation in the fact that every single time that there is this massive pressure pushing down or these fluctuations of fake numbers, that off exchange ratio goes up. Now we're closing in closer to 70%. I'm gonna pull y'all in with this. Now, 900,000 shares available to borrow at 50%. Cost bar, obviously, all that's fugazi. These are synthetic shares that are being populated up here, right? Now, but here's my thing where I want to pull in. Now, check this out. Let's see. Where was my thing at? Oh, wait. Oh, it's here. Hold on 1 second here. I hope I got it pulled up. Hold on. Short interest. Hold up. All right. Oh, wait. Where's my? Oh, here we go. All right. Trading data. Now look at this, guys. 66%, 67.9%. Now, guys, of course, this doesn't just mean that this is what it is, but this is just where I was thinking it, and it added up. 100% of AMC's trading volume is happening on dark pool. That's why you're not getting a report. That's why they can't show the number. That means that the percentage over here is how much of the stock is being traded or being shorted each day. So this isn't just saying at first we thought it was 66% of whatever number there was on the dark pool. No, they have all the shares. They've shorted the float enough to have control of the float. Market makers are not routing any of that to the lit exchange. All of that's going to dark pool. And then what's occurring now is you're seeing the volume of which they're shorting, right? And what they're creating synthetics. Now note this, right? And we can come back down here to when there's high pops. Now let's look at this. On 05, there was only 46% of the shares being shorted, right? Now we're imagining that there's 100% of the dark pool. That's the volume. They only shorted 40% of stock, which is 50%. That's still a hell of a lot. But 46%. So let's go back down here and look on. Hold on, let me see what day was that. On May 5th. Let's see what it looked like on May 5th. Coming out of 1 hour. May 5th. Interesting. So on May 5th, the stock was on a climb, right? That's when you had your pop on May 5th, right? Now follow through with this. May 9th was a 67% short interest, right? So let's go to May 9th. May 9th, decimation. Interesting. So now let's come back up here again. Let's say on I wish I could find a short one. 426 was 49%. Let's come over here and see what 426 looks like. Interesting. So on 426, we green through. So now what I'm correlating, bringing to y'all with this is that, guys, there is no buying power, any pressure from retail is going towards the stock. No matter what you buy, it doesn't matter. What's sold doesn't matter. Similar to what this picture is showing up here, where there was a sell order of somehow 0 at 470, and then at the same time at 470 there's 1 million shares, and this is today, that were sold, and the stock price didn't either go up or down. Those, of course, are just synthetics, right? Those synthetics are being brought in. This is, of course, how they're able to move and cover or show what they want to for short interest, right? Because they have all of the shares. They can turn that nozzle on and let shares in to be able to short, right? To cause down pressure, and they cut it off. On high days where it's high short percentage, that means that they've the amount that they have allowed, right? And mind you, they have 100% of float. They might have only allowed 67% of the trading to go on, right? So then 67% of would have been 100% of the shares were shorted that day, which would correlate to how it could seem like, how is it everybody's buying stock, but it doesn't move except how they want to move? This was on the 23rd, 67.9, almost 70%. Let's go with the 23rd. Decimation. You follow that up again. The 24th, 66%. Of course, obviously, y'all know we've been in downtrend. So from the 23rd to 24th, decimation. I say all this to show that there is there's no selling that's going on by retail's part. But now I think that money's dried. They're in such a situation now that not only are we under full autopilot, but it's like they're setting up for a bounce. They're pulling this thing down as far as they possibly can, which again still is trading within those same levels because there's a spring that's about to come. And I'm only saying that for a couple of reasons. One, we've got leading with our court case, there is the document that's kind of like a what's the word I'm looking for here? The word is slipping my mind, but basically, there's documents that are showing AMC's stock price, and I guess what they would call imperative data they don't want retail to see. Obviously, this imperative data probably is going to show you what the stock price is, how much they're actually shorting, how many shares are actually out there. And it's been said that for those that are able to view this, right, they can't be trading the stock. That's not for retail. That's for the people that were retail and then got involved in the lawsuit. But what that's showing me, guys, is y'all got to just hear the stuff. Whatever's on that document is so bad that they have to stop. They don't even want us to see it. But then two, they're saying that if you do see it, you can no longer trade the stock. Come along now. We're going close to this debt ceiling thing. Obviously, they're going to pass this debt ceiling. There's no way they're going to allow that to happen, which obviously I said was all FUD, but that still doesn't change the fact of how dry the market is. It's illiquid for them. It's illiquid for borrowers, which is why now, before at least they were borrowing shares, there was maybe even a realisticness to them buying them shares. Now they're just poofing up shares. Because when they can't get somebody to lend them money, retail isn't buying to even create this price movement. Right? So now they're just creating synthetics. And then using those synthetics to bring the price down because there's not that much buying pressure. But the point is, though, they can't bottom it out, right? They're stuck between a rock and a hard spot again. They can't just short to the floor like they want to, right? That leaves Adam Aaron high and dry, smoke. There's not enough buying pressure to counter this shorting. So now they're sitting up here playing this full algo. It's just algo suppression. But there's talk, and I have to go confirm, that our court hearing on the 29th is possibly being extended out up to 90 more days. Ladies and gentlemen, I told you at the beginning of the week, prepare as for these next 2 weeks. They're about to come in. It's about to get zesty. Guys, this is what zesty looks like. But what I can tell you is there's something on the brink of coming here. The sheer blatant manipulation is telling me that they're smarter than that. They wouldn't just play it just straight out in front of you. That's how they were able to play this game so long anyways, because they were in the background kind of moving things. But for them to be tapped so much to where it's like, hey, listen, we don't have an option but to just straight up steal in front of their face. That's called being desperate. That amount of being that desperate as a market maker tells me where we are. This beast has gotten too big. Retail is now on the sideline just sitting here, still holding the stock. But now there's no... You need people buying just like you need people selling for stocks to be profitable. You need people buying just as much as you need for them to sell to even be able to have rational swings or moves in these plays. There's nobody buying. And there's nobody selling. They're just making synthetic short positions. And then cutting on the nozzle to allow the water to run with the specific stock. Because now normally, let's say this was back in when the first run-ups happened in June, right? Where they could have had XYZ utilization of shares they let out, but there was so much retail buying that it would counter the fact of what they were doing. Now there's nobody buying. So now they're able to turn that on and have 67% of the shares be shorted. And they're only letting out 67% of the 100% of shares that they are trading on dark pool. Because market makers are sending that. It's not to say that you're sending it. You purchase AMC is getting automatically routed to a dark pool, which is how they're able to inflect and control this price. But notice down here how your short volume ratio continues to rise, or in days that we have this impossible fraudulent movement with stock. How is the price going down, but the short interest is going down? But the short interest go down, that means they're recovering. That means the price would have to go up. But here we are, the short percentage is increasing, but somehow the short interest is going down. Make one and one equal 4 for me here, guys. While the days to cover goes down, but you're shorting more shares, 900,000, 800,000, 900,000, 1.1, 1 million, 1 million, 1 million. So somehow they magic came up with 6 million shares. But less than 100 million shares have been sold in the last 7 months. That's roughly what, 15 million shares a month that is less than? They done popped up 15 million shares in the last 6 days. Not to mention the fail to the livers. People, something is cooking. Something's smoking. Something's smoldering. I know what it looks like when it's desperate. This is the same thing that was happening with our first run-up. Hold tight. Hold steady. As I always recommend, you need to have 2 different portfolios. I know everybody's overextended. I know we're getting ready to close up, but guys, it's not too late now to go ahead and pick up some Tesla, Nvidia, Microsoft, XRP, H-bar. There's more than one way to make money off of trading. Don't get stuck in and think, oh, AMC is my only chance. That's how we came in. That's false. You're sitting over here holding AMC while squeeze-like motions are happening in long-term investments. $100, a 30% move on Nvidia. Oh God, Tesla. All right, I keep saying it again. The tech sector is going to levy. The tech sector is what's holding up the market. Tech sector is where you need to be starting the dollar cost average in now. Not all your money in, like we said in the last video. 10%, 20%. Let's say that you had 10,000 or 5,000 or 1,000. You take 20% buy in, sit back. If it goes up, cool, drop another 20%. If it goes down, cool, drop another 20%. Goes down more, cool, drop another 20%. That's dollar cost average, and that's going to give you a good average. But with these stocks, I'm telling you, this is nowhere near what the price of these stocks is going to be in the next 5 or 10 years. So you're buying at a bargain now. You could have got a video at 150 2 months ago. I'm telling you right now, don't miss out on the greatest generational wealth transfer. There's so much fun. Follow what Warren Buffett said, right? When others are fearful, you need to be in that thing being greedy as hell. And when others are greedy, oh yeah, that's time to be fearful. Y'all, much love. As always, go check out the description. Go get yourself a ballot wallet if you don't have a crypto cold storage. I like it's a physical wallet because it's not online till you turn it online. But you can still see your cryptos there without it being online or with your passcode out there. And you can view it all on your phone the same way. And also with Ledger Nano X. Those are my 2 that I recommend. We also get all the time, where do I buy my XRP? I buy my XRP off Uphold. I link up over here on the at the end of each video the crypto playlist. I show you how to buy XRP or buy cryptos off Uphold, and also how to transfer to your cold storage wallet. Much love, y'all. Don't forget you get discounts for clicking the link down. I think it's 5% off of Ballot Wallet. I'm not for sure what it is for Ledger Nano. I got to double check, but you definitely get a discount on your Ballot Wallet. But guys, we're into it. Hold your head on steady. It's getting a little intense. It's getting intense. Now is the time to be buying long term and watching your momentum plays. I played the hell out that Muln. And I'm happy because I already said I've done this before. Guys, do not play the game. If you're not learning, you're losing. That's not a thing. We didn't fail coming in AMC, but if you don't picking up, oh shit, oh, hey, I didn't seen this happen before. I already knew. I said, wait a minute. Dividend? Why is there no price in this? I knew immediately. I sold it. Bloop. Kept my dividend outside. Boom. I got the dividend in there. They've switched it now to say the dividend is now a preferred equity, just like APE was. So now they're going to use that because I was saying, how are they trading those? It's been 2 months, a month, or I forgot when they did, a month since they did that. And they've been utilizing those shares. They just created shares. They smoke people, and people don't even know it yet. They got 8. Mullen got 8. So now you know whenever they come up and you hear dividend, they're about to hit that. How you play that? Go buy in, get your dividend, slide out. Now you got the dividend. Dividend's going to get converted back to those shares eventually. You just picked up free shares. And you usually get a nice price move going into the news. So you picked up the cash, boom, got out of there. Now I've got whenever they put whatever price they're going to put on, which, this is just amazing how fraudulent things get. But like I said, hey, this is the market, and this is the way that we're going to play it. You hear me? Guys, much love. Hold it down. And we can keep bringing slappers. Much love for all the support. And y'all already know what comes next, don't you? Did you know what's coming next? Yes, sir.